Today's session is about an insurance. Insurance is a contract between two parties. It's a contract or agreement between two parties. Then it is derived from a Latin word which means to care. That means free from anxiety and fear. We all know about insurance. So it is common for both the private and public organization as it is mentioned in the 7th schedule. Now let us see about the insurance, specifically about the fire insurance.
Definition, uses of fire insurance contract, fire insurance policy, policy condition, double insurance, difference between reinsurance and double insurance. So fire insurance, we all know what is the purpose of taking fire insurance. If any goods is damaged by fire, for that purpose we have to take fire insurance. So next one is the definition. Definition that is according to Insurance Act 1938 defines fire insurance as business of effecting otherwise than incidentally to another class of insurance to business contract of insurance against loss by or incidental to fire or other occurrence customarily included among the risk insured against a fire insurance policy. Next one is uses. So what are the uses of fire insurance? The main purpose of taking all type of insurance is protection, likewise the same. Then coverage, that is how much value of policy it's cover, and to recover the impact damage. We have to recover the damage that is caused by fire. The next one is exemption. What are the exemption we can claim? Then how can we get renewal for that insurance? Then compensation. How much of amount of compensation we can get? So next one is contract, and that is insurance is a contract between two parties. So likewise the same, fire insurance is a contract between insurer undertakes to pay the insured in case of damage. Next one is to claim free insurance. Two conditions need to be met, and there must be a loss due to fire, and the fire must be an accidental. So on the fire insurance contract there are four things is main important. Insurable interest. The insured must have insurable interest in the subject matter of the insurance. Utmost good faith. Similar to the life insurance, the contract of the fire insurance is a contract of utmost good faith. Next one is indemnity. Indemnity means that is recover the actual amount of loss from in the insurer. Next, fire in the case. That is, fire in the case means likely to compensate. The fire is the proximate cause of damage or loss. Then fire insurance policy. How fire insurance works? Accident fire, then building, machinery damage or other business or personal assets, then premium fire insurance policy. Okay. The next one is types of fire insurance. So types, there are so many types. The first one is specific. Under specific policy, the value of the property is not mentioned. For example, a building worth rupees 2 lakhs is insured against fire for 1 lakh. The next one is if the property damage to the property is 75,000, the insurer will get the full compensation. This means the value of the property is not relevant in determining the amount. So next one is valued policy. Valued policy means the insurer has to pay a specified amount independent of the market or actual value. So such a policy is very rarely issued. It may be issued on artistic work and a similar rare articles. It is called valued policy. Next one is average policy. Fire insurance policy containing the average class, that is, the insured is liable for such proportion of the loss as the value of the uncovered property bears the whole property. For example, house insured for rupees 4 lakhs through its actual value is 6 lakhs. Next one is floating policy. Floating means used for covering fluctuating stock of held in different locations. With every transaction of sale or purchase, quantities of goods kept at different places, its may fluctuate. Next one is reinstatement policy. It is also called a new for old policy. Such policy avoid conflict of indemnity. The insurer has the right to reinstate the compensation to be insured in cash. It may be grant, it may be for building, machinery, furniture and fittings. Then consequential loss, that is provide for loss of tangible and intangible properties. We know that is goodwill is an intangible asset. So next one, the insured may suffer a greater financial loss. Here's a example, that's closed down business after fire for repair to meet fixed expenses, rent, salaries. Next one is comprehensive policy. Comprehensive policy is also known as all insurance policy. It covers the risk of the fire, that is civil commotion, lightning, theft, etc. There may be exclusions and limitations. Then policy conditions. So that is under this, it is it's look like a pyramid. Under this it is mentioned like this, that is how much room destroyed and how much we can claim, that is sum assured. Here for example, 1 room damaged payout equal to 100% of sum assured, and 1 room destroyed payout equal to 20% of sum assured, increasing percentage of sum assured. Next, reinsurance. General Insurance Corporation of India, then Munich Reinsurance Company, African Reinsurance Corporations. Here there are some examples. So next one is types of reinsurance. It is treaty reinsurance. One party agreed to take out the financial risk for one specific class of policy. For example, all auto policies. Next one is facultative reinsurance. That's they may insure in a stadium. One party agreed to take a financial risk of one specific policy. Double insurance. When the subject matter is insured with 2 or more insurance, it is called double insurance. For example, insures his motorcycle worth rupees 1 lakh with 3 insurers with, for 50,000, with Y 40,000 and with Z 15,000. So total 1,05,000. Then double insurance and reinsurance. So double insurance means it involves the difference, that is what are the difference between the double insurance and reinsurance. It involves the same interest, here insurance of different interest. That is insurers remains in such capacity, insurance becomes a insured relations to reinsurer. Insurer insured in the first contract, then has no interest.
So insurance is important for each and every one of life. Specifically, fire insurance have been taken to protect the goods caused by the damage caused by fire. So the purpose for taking fire insurance is most important for factories, not only for factories, for houses, etc. So insurance is a part and parcel of everyone's life.